Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about Ninja loans. They're back. They're back in full force. We're going to specifically be speaking about DSCR loans or bank statement loans, right? For mortgages. It is a big deal. I go over this in detail on how you could use DSCR loans for your benefit on the real estate crash course, but these have been abused, and this is going to lead to a lot of losses in banks, and it is going to lead to problems in the real estate market. Before I get into that, I want to thank Irene. She sent me an email. She said, I just want to thank you for saving us a ton of money. We went and looked at a property and thought a certain price, I don't want to get into the particulars, would be an okay amount to offer, and then started calculating the rest of the renovations. They put in a new electric and HVAC, and that would have been at least, she goes into this talk about how much we saved her from the course. And that's what I like hearing. I thank you to everybody that keeps sending the emails. It is hard to answer everyone's emails, but that is the whole point of the course. I put a few more links down below, 80% off, $199 for the real estate crash course, just the real estate crash course for $199. You are going to find way much more value than that. It will either save you 5 times or you will make 10 times that much at least. That's like an understatement by going through all of those courses. Okay, I think they're up to like 35 videos on that course alone. All right, here we go. Let's talk about bank statement. Let's start with bank statement loans and who should get one. First off, Ninja loans. I use a lot of them in the 2005, 2006 range to flip homes. They were great. Had no prepayment penalty. Didn't have to do a whole lot of documentation for them. I loved them, all right? But I wasn't over leveraged. And a lot of people are finding themselves over leveraged, and especially the banks right now, okay? So check this out. This is out of bankrate.com, and it is entitled Bank State Loans. Who should get one? It says, what is a bank statement loan? With a bank statement loan, also known as stated income loan, they're back. They've been going on for a little while, just so you know. They changed their name. That's what most people don't get it. They're like, Ninja, this time is different. Back then they had Ninja loans, no income verification. Yeah, we got those all over again over here. It's bad. It's way worse, actually. All right. It says, also known as a stated income loan, you won't need to provide your lender with some of the typical financial documents needed for a mortgage, such as a W-2 and tax returns. Instead, you'll use bank statements to prove income. This can be helpful if your income is inconsistent. Your employer doesn't issue traditional paychecks, or you claim significant tax deductions. Lying on your tax returns. I'm telling you. We're right back there. It's awesome. And just, you know, this isn't new. It's been going on for a handful of years. This might apply if you're a small business owner, doctor, lawyer, or real estate agent, or investor. There's your key, right? Speculators that dove into the market, just like they did in 2004 to 2006, and then everything started coming down by 2007. For instance, it says one example would be if your tax return shows that you made $100,000 last year when you really made $200,000 because you were able to deduct an expensive printing machine that you bought, says Brad Siebel, head of mortgage at Sage Mortgage. Your bank statements, rather than your tax returns, would adequately show your income, right? You're like, that doesn't sound too bad, does it, Ninja? It actually is. It says how these loans relate to bank statements loans. Bank statement loans are considered riskier than typical mortgages. What? I love this stuff. I'm not gonna lie. I absolutely love this stuff. Here, I'll give you an example. Carlos. Carlos is in the chat. He's right here, a million restaurant tips. Carlos took the course, and he has been a real estate investor for a long time, right? Let him know, Carlos. And there are little things, little tricks that you don't realize until it's all put into one big picture and you go, oh my gosh, this is what we're going through right now, the real estate crash, is worse because the prices have expanded more. But what's crazy is that all of these things that compounded back in the early 2000s to cause the great financial crash, the housing recession, right, are all here right now today, but 3 or 4 times worse. That's not an understatement. And so when people sit there and go, oh, you have no idea, like houses are just going to keep going up, like based on what? What, you're just going to instantly get miraculously higher wages? The government's just going to shell out money? No. As a matter of fact, we are going to see double-digit mortgages within the next 12 months. Double-digit. That's 10%. It's going to be bad. But look at right here. It says the loans are considered riskier than typical mortgages, and many banks and mortgage lenders don't offer them. But don't be fooled. The ones that do, the dollar volume is massive. That's because they're non-qualified mortgages, meaning they aren't backed by Freddie and Fannie. That's exactly what happened in 2005. Non-QM or qualified mortgages include any loan that doesn't meet the conforming standards set by Fannie and Freddie. These standards cover characteristics like the loan amount and debt to income ratio. So right there on that line alone, you'd go, yeah, Ninja, this isn't that big of a deal. It's not a conforming loan. Okay, see, most people, they can't afford these homes. Even dating back to 2019, a lot of people should not have gotten into the homes they were in, even though they had mortgages around 3%. I know that sounds crazy, but it's true. All right. How do bank statement loans work? The application for a bank statement loan differs slightly from the traditional mortgage, and getting pre-approved or pre-qualified can be a bit more challenging. When you apply, you'll provide a lender bank statement as far back as 2 years for both personal and business accounts. You'll also need to disclose other information about your business and expenses if applicable. The lender then analyzes your income and determines your net income. From there, if you meet the lender's other requirements, you'll be pre-approved for a certain loan amount. Let me stop and say this. Let's dive into the actual DSCR loans. And the reason why it's important is because how that differs a little bit from these is DSCR loans, you could either use your social security number as the managing member of an LLC and get a favorable 80% loan to value rate. DG, thank you so much. Hold on. Wait, check this out. DG is saying it right here. The ninjas are back. No income, no asset, no jobs. What a joke. Love from Israel. Hey, be safe, DG. Thank you so much for the super chat. Okay, so DSCRs, and they're great for you as a investor if you don't get yourself over leveraged. But you have to realize there are a lot of people out there that have gotten way over leveraged. They got super excited about Airbnbs that are now crumbling as cities around the country are outlawing, banning them, limiting the amount of them. People that got into homes that they couldn't afford, and so they fudged the numbers, just like Ninja loans. That has been happening for the last handful of years, and it's happening on a massive, massive scale. I've told you about how adjustable rate mortgages have exploded in use as of April. Let's see, I wrote it down the other day. As of April 2023, just that month, 18% of the loans, the mortgages, originated from $400,000 to $1 million. 18.9% of them were adjustable rate mortgages. From the price of $1 million and up, 45% of loans originated in just April alone were adjustable rate mortgages. And think of it this way. Since April, those people that got those adjustable rate mortgages, they can't refi for a lower rate. Rates keep going up. The 10-year has exploded past. That is why this gets me so exciting, and I'm not joking, foaming at the mouth, getting ready to take advantage of this crash over the next couple of years. That's why you have to be ready. Are you ready to take action? Type 1 if you are getting ready to take action right now. If you are doing something to prepare yourself, to position yourself to take advantage of these foreclosures. Okay, here's a story out of mpamag.com. And this is very interesting. It's entitled Deep Haven Goes Deep with DSCR Lending. It says higher interest rates, making the cost of borrowing more expensive, have given rise to something of a resurgence in DSCR lending. The acronym stands for Debt Service Coverage Ratio, and one of the industry's veterans in such lending has seen a significant uptick in this type of commercial real estate loan. Remember, commercial real estate's any type of property, like your typical commercial building, warehouse, things like that, but anything of 5 units or more in residential properties, okay? That's a commercial loan. Mortgage Professional America reached out to Dank Pickney, a general counsel and chief compliance officer at Deep Haven Mortgage, to learn more about DSCR's growing popularity. This story just came out yesterday, all right? People associated with qualifying mortgage lending. And it's often the same brokers, lenders, aggregators, and securitizers that also do consumer-based non-qualified mortgage lending that originate and acquire DSCR loans. So that's why I started with the non-qualifying mortgage explanation a second ago, and I brought you into this, okay? Because even though they have some differences, they're usually associated with the exact same companies doing these loans, okay? And just, those are being securitized, and they're putting them together in derivatives, just like 2006 mortgage-backed securities. But now they're called commercial mortgage-backed securities. Just like they were Ninja loans, now they're DSCR and non-qualifying mortgages. Isn't that crazy? It's just a different name. No one's gonna tell you this on YouTube, and that's why you need to get excited about this. You need that competitive edge. That edge is simply this. You know something's coming before everyone else. Just because, and it's so crazy, it's wordsmithing. It's just the change of a name. It's the change of a term. It's that simple, and it confuses 99% of the public. That's what I've been banging, the walls and trying to warn people about. All right. So he says, people associated with non-qualifying mortgage lending. Deep Haven, of course, is a multi-channel aggregator. We have a large correspondent network as well as a large wholesale network of brokers that originate DSCR loans. While the company was founded in 2012, Deep Haven first got into DSCR lending 5 years later. Okay, so now I want you to imagine this. And this is why it's so important, because people have been telling me forever on these videos, these real estate videos, and now a lot of people, I meet people all over the country. I just told you, I met someone, a part of Ninja Nation, they had 900 rentals. They've liquidated 450 rentals recently to get ready to this. Somebody from Las Vegas that has 50 rentals, has had multiple Gulfstream jets and took the course and said, holy cow, your course made me forget about, or it made me remember what made me the size I am with my rentals. And I'm going back into the basics to dive in and take advantage of this crash. They see it, right? Know this, all those people outside that say, yeah, you're crazy because we don't have Ninja loans. This company right here, Deep Haven, founded in 2012, said that 5 years after they were founded, so 2017 is when they dove deep into DSCR loans, okay? So DSCR loans have been around for quite some time. So Ninja loans have been around. People that couldn't qualify normally, speculators, were able, now this is where it's really dangerous, and please understand what I'm saying. DSCR loans are built in a way that you do not have to put your social security number. This is why I love them. I'm gonna be honest with you. And I go into this in the course, why you're gonna wanna use these loans during this next crash. There's probably not gonna be that many of them available, but there's a way of getting them. You don't put your social security number and your name to that loan. You're not tied to it if everything goes to crap. The bank has made the loan based off of one thing. They tie it to the property, obviously, right? There's a mortgage tied to that property. It's based solely off of the income generated from that property, all right? And there's two ways of getting a better rate, or actually a better loan to value. If you, like I said, put up your social security number and your a little bit more information, even though the loan is gonna be made, the mortgage is gonna be made in the LLC's name or the corporation's name, you being a good steward with your own money and thus hopefully the company's money, you would get favorable terms, more favorable, so like 80% loan to value, all right? Whereas normal DSCRs, you're sitting around 70% loan to values, okay? These are the kind of loan products I want you to be in, because when we get into debt, I want people to understand this. I am all for being debt-free in your personal life, but then starting businesses with debt the proper way. They do not teach you this online. They do not teach you this on YouTube. Why? Because it's, first off, it's not sexy, because it doesn't sell books, because it's a one extra cog in that machine, but what it does is it protects you massively, is by taking on debt through an entity like an LLC, an LLP, a C Corp, all that kind of stuff, right? These are what the foundations that I teach. When you do that, you protect yourself if something happens and attacks you outside of your control. But in your personal life, you want to be wrapped up in the right entity, like a trust, have everything paid off, things like that, okay? I'm not a financial advisor, tax advisor, lawyer. I'm an investor. And that's why I think it's so vitally important that people understand this. All right. It says here they have been active in the space going back to 2017 when the first product really became available in the market, which was based on rental yield as opposed to borrower income. And that's what debt service cover ratio is referring to. It's the ratio of the rental yield divided by the mortgage payment. Hear me understand this. Type 3, if you believe that rents are unsustainable, that at a certain point, the American population is going to have to start massively not paying rent. And actually, we've already seen rents coming down off their highs, but that inflation has caused it to a point to where it's pressing the renter and they can no longer pay these rents, right? They're gonna go, hey, you know what? I gotta feed my family and keep lights on and keep my cell phone going so that I can keep a job. And so I'm gonna stop paying rent, where a lot of these states are allowing me to stop paying rent and it doesn't matter what happens to the landlord. All right. So now think about where you're in the bank's position. Banks have gotten in these DSCR loans and they've qualified these high loans, these high prices of properties based off of the amount of rents. Well, now if those are not sustainable anymore because inflation keeps going crazy and people stop paying the rents, you can see where this is going. All right. And I want you ready for this. You need to take action now. You have to be ready for this. This is a multi-year preparedness note, right? But I believe that you are going to see in middle of 2024, this bubble, it's already popping right now because we're seeing the banks failing because of these commercial backed mortgage securities, right? I don't know why I put 4 on there. It's 4 letters in the acronym, but it's already happening, but it takes a certain amount of time. Going back to 2006, mid 2005 is when everything was imploding in mortgage-backed securities, and you didn't see Lehman Brothers close until 2008. All right. So now we have seen this implosion going on for a year now, where the banks admitted last September to the Fed, there's 700 and something banks. Hey, we don't have the money to keep going forward. And the Fed's like, oh gosh, so we're opening up the repo window. So this has been going on for a year. That's why I'm putting another year to this. So you have a year to prepare. But if you don't know what steps to take, you're going to be in trouble. So you have to dive into education for yourself. Now it says new back then, DSCR has been growing in popularity these days due to certain shifts in the market, he added. It's broadly adopted now within the market, Pickney said. There's a number of macro reasons that the broader market is expanding at the pace it is. First off, we have a housing shortage in the country. That is not true. 100% that is not true. They said the exact same things in 2004, 2005. What you have is an affordability crisis because a lot of people that were sitting on the sidelines for way too long that should have gotten in a long time ago now saw all their friends making money and the prices going up, even though velocity of transactions has collapsed. And they go, I want it now. And they're going, we got to provide ways. And banks love that because what they do is they get you into these loans. I know it sounds crazy. This is how it works. They end up foreclosing on you and they end up making tons more money. Look at all the banks that failed, right? But they didn't fail. All those CEOs and COOs and CFOs, they went to work for other banks. They consolidated. Sure, people lost their jobs. The tellers, they don't care about the tellers. They don't care about the branch managers. They don't care. They just don't care. They get to keep their jobs, the big C-suite execs. Then they rebuild the companies, these banks, they become bigger, and now they're known as too big to fail. Type 5, if you understand this. Type 6, if you still just don't understand, but you need a little bit more clarification. But they really, this is the plan. And it's a multi-decade approach to taking all of the banks, thousands and thousands of banks in America, and consolidating them down to under 10. Okay? In 1787, America only had 3 banks. People need to understand that. It says here, the deep haven focus is more on what Pickney calls mom and pop borrowers. Think about this. This is, again, very, very vital that you understand this. The deep haven focus is more on what Pickney calls mom and pop borrowers. It's a different kind of market to build a large apartment building, he said. We're the 1 to 4 primarily, which is mostly what people say DSCR and BPL, which stands for Business Purpose Mortgage Loan, lending is. That's what they're referring to. He's telling you right here, we're going after you, the average everyday mom and pop real estate investor that has no clue what's going on. And hey, no problem. You don't need any income verification. Just come on in. The water's fine. Sure. What? You want to buy that $1 million 4-plex or 5-plex and the rents are, $2,500, $3,000 a month? Sure, no problem. We'll give you the money. So we're going to come back and take it back in a few years. Just you wait. And I want people to understand how big of a deal this is. Now, there's a way to use DSCR. I go over that in the course. You want to take a look at it, 80% off. There's a few discount links below today. I think it's very important that people get ready for this because this is the greatest opportunity ever. Imagine, type 7 if you wish you would have been ready with cash on the sidelines, out of debt, and had your portfolio dream idea put together in 2008 while everyone else was losing their houses. Let me know down below if that is something that you wish that you would have had. Now, you have that opportunity again, but it's bigger. Right now, we have wars all over the world. We've got economies collapsing and literally splitting into two. China, Brazil, Russia, India, all of them. And then the US, Canada, and England. There are a lot of people that want to watch us fail. I don't want to watch you fail. I want you to succeed. Because if we don't keep the wealth of this nation in the middle class, we're doomed. So if you're ready to take action now, I got a few links down below, and it's time to start crushing it together because I don't know about you, but I can't wait to take advantage of this. And honestly, all I want to do is fly around the country and meet you guys and go, all right, here's Bill. He just crushed it and made $100,000. Here's Sally. She just bought a house. She made $50,000. Hey, here's Josiah. I don't know why. That's the first name I thought of. If there's any Josiahs, type 11. We're going to watch him flip a house and we're going to crush it. That's what I want to do. I'm so pumped. All right, I put the links down below. The Economic Ninja is out.